What's up everybody, Tom here with another video. In our previous video we discussed buying the rumor and selling the fact, and while Netflix top subscriber numbers, even with the big number that they came out with, it looks like the post-market's not exactly interested in the stock. Why does this phenomenon happen? Well, we'll be talking about it in this video, but we'll also be talking about our technical analysis levels for the S&P 500, Nasdaq, Apple, Tesla, Bitcoin, and more. We've got a couple of little things that are slightly concerning about where we've just hit in what's been a very bullish recovery. Stay tuned. This is going to be a good one, guys. All right, everybody, and welcome to the market recap for the markets closed 19th of October, 2021. And what a glorious green day it was across many sectors. We had healthcare finally finding its feet and moving on back up. You guys know I like that in the medium term of the bull market. And then we also have the technology stocks. We've got Apple coming through with the goods after a beautiful closure on the previous day. We had Pins also coming up, which was a nice one after a very lackluster couple of months. Facebook came through even with the bad news around it. And some of the FANG stocks were a little bit more subdued. But when we take a look at the market in general, it was strong. And it was strong after hours as well. And we'll take a look at exactly where we're hitting and why I think there's a technical level that's pretty important that just got hit. But basically, S&P 500, 0.77%, Nasdaq bouncing with it, Dow Jones coming up, and IWM lackluster there with the 0.3%. The smaller caps not doing as well. Standout for the session, though, Solar Index. We were talking about this recovery, and Solar Index is going from strength to strength to strength at this stage. 10 up 4.01%. Luckily, we discussed this in the live streams over the last couple of weeks. We've seen the recovery. We're always on the lookout for these kind of sleeper hits, and it looks like solar has really been paying out in that aspect. All the other sectors were mostly up except for XLY, which has been on a big run, and it tends to have that stronger November period as well. So we'll keep looking at that and keep following it. Before we get into the rest of the analysis, I just want to remind everybody that we are in earnings season. So we saw the Netflix earnings, good on paper, but in practice, probably the market already expected a very good number coming out. Tesla, we've got that coming up. Why is there some selling today? We'll be talking about that into the session. And then, of course, we've got Snap and Intel and a whole bunch of other ones, American Express, etc., coming into the back of the week. It's exciting times. We're in earnings, and I'm always looking forward to it. Now, I want to just quickly go over this gap analysis because I still think this is incredibly important for TA traders out there and for any trader or investor, really. And this is brought to you by Ian Worthington, a member of our Discord community. You can always join the public Discord by clicking the links in the description down below. Come on in. There's 5,000, 5,500 people in there. It's awesome to have such a great community of people discussing indices, stocks, everything else down in that section. But realistically, what he found was that, if a gap's going to fill, it's going to fill fairly quickly. So you can see here the drop off in the gap fill percentage rate as we go past the first couple of days. And this helps traders to be able to analyze if a gap's going to fill quickly or whether a gap's going to fill much later on. Remember, this is only for up gaps, and in general, gaps fill, but it takes a long time. Remember, the stat is actually 91% of all gaps fill, up gaps that is. However, some of them take quite a long time, and that's what you've got to be really important here. So it's a great drop off, and this comes from 1927 to 2021. So it's no joke in terms of how much data's there. Let's get into the technical analysis though, and I want to start with the fear index. I want to start with the VIX because the VIX, it's come right back down, and we've got fear coming out of the market fast. And as we know, what does that mean? Well, it means we need to start paying attention to it again, because you'll notice I take it off the screen when it's not important, and when it comes back down to key levels, then we start to discuss it. And we've talked about this 15 level for a little while. And the reason we talk about it is because if we go back to a weekly, we do our studies from the global financial crisis, we'll notice that we had that increased volatility, of course. We came back down, we held around that 15, 16 level for a couple of years, and then of course went back to the standard, 10, 12 kind of numbers after we saw that full economic recovery. So whenever it's down here, we start to think about, well, wait a second, is the market a little bit too low on fear right now? Is the recovery a little bit too aggressive? And let's go now look at our second chart, which is the US 10-year, because the US 10-year just closed at a high here over on the right-hand side. That's a pretty important closure because we've discussed here a few times how the US 10-year, at least initially as it's going up, will shock the QQQ or the Nasdaq. Effectively, they have an inverse relationship. If US 10-year goes up, technically the Nasdaq will go down. And that is usually short-lived, but it can create a little bit of resistance. And we'll talk about why that's important when we look at the S&P 500 in a minute. So 1.64 here on the US 10-year. We expected that to go to 1.7, 1.75. We still expect that to occur based on our weekly analysis, based on our current trend and everything that's looking fairly bullish towards this US 10-year. And I also expected at some point hit 1.95. Most people on the street believe this number is very possible, and that may mean, it's not as freaky to the markets as it once was, but I always think that it's that initial shock that we want to be able to take advantage of as traders. We know that it will stabilize most likely, and if it does stabilize under these key zones, then we can take advantage of that. Let's move over to our SPY analysis though, and we're going to flick things up a little bit with our options discussion, because I think there's a bit of misinterpretation of how people think you should interpret options. And I think that's because they're a complicated beast, and I look at it a little bit differently to a lot of people. And I'll explain the basics today in today's video. Also watch our live session that we just completed for the close, as that has some great information in the back half of why I do what I do and exactly what kind of things I'm looking for in the market with these options strategies, or options walls as we call them. So here's the SPY, and the SPY downtrend, or is in this case, it was the ascending channel. We've now just hit it. So look at this closure. We've hit a level that was clearly found as a level of support for quite some time. We then found it as a resistance once and sold off, and we've now just hit that level. I think that's fairly important because we've seen now quite a few days of strength. 1, 2, 3, 4, 5. Now in general, around 5 to 7-ish days of bull strength is usually met by a little bit of a bear, and the bear will come back in and of course look to short it off. But I do think we're in a bit of a sustained trend here into the optimism of earnings. Some people are pointing to the volume and saying, Tom, that's a little bit low. It's not exceptional. It's certainly not unheard of, but with a bigger recovery, you do generally expect a little bit more volume. Look over here, we've got that big volume, but in general, pretty normal to have lower volume on the buy than on the sell. So let's talk about this. We've hit a resistance. We will go into some options discussion around this resistance. Do we expect now for a small dip to occur and possibly then pick back up? We've got a 2050 cross here on the daily towards the bull side. And this is all on the SPY. So remember this number. We're at 450.89 in the post. So let's now go over to the SPX and think about these numbers. So we've got really a couple of scenarios. Lots of strength, lots of gapping. You can see the gaps here. We talked about the gap analysis. So let's think, okay, we found, let's say, that resistance. We get a bit of a pullback. Where are the most likely scenarios for the market to come back to? So we go and have a look at the daily. So most likely scenarios are going to be the previous resistances. So we've got previous resistance over here at that 44.60. We've got previous resistance over here at the 44.20. These two key levels, I think a lot of people are going to be looking at, in specifically the street will be looking at them and saying, okay, can we push it down here? Are we going to reload? Are we going to scare a few people into thinking that it's, not a recovery, etc., etc. So if we do get pullbacks to these areas, do we expect buyers to be there? I would say yes, based on this current buying kind of consent. And usually when we go back to these areas, you're looking for little lightning bolts, smaller time frames, intraday style trades. You guys know what to look for by now. So that's a very, very important factor. And we are at, remember, this point here right now. So let's now talk about the options, and we'll talk about the option strikes. So the way I use this chart really is basically I look for the two outliers. Sometimes you won't have them, and therefore you do not use the chart. And we've got an example with Apple that we'll talk about soon. But in essence, the calls seem to be, at this stage, mostly correlated around this 450. So there's quite a lot of 450 calls here. And what that does is it does create a call wall or call barrier. Now, it's not a guaranteed thing, and we always want to bring this back to our TA. So first and foremost, the most important thing that we're doing is we're recognizing the TA. Now, we've just closed at a 450. What is a 450 looking like? Well, it's looking like it's going back into that, of course, trend line and finding potentially some resistance here. We also have expiration of some options coming into the Friday, at around 450. So it is going to be in the best interest of the street to probably hold it around this level, maybe consolidate it here. Is it always going to work that way? No. But I do think that some people may see this as a take profit zone for that quick recovery. They've got the trend line, they've got that technical resistance, they've got the 450, and they can see that there's a lot of calls written there, which may put a barrier in front of the place. And that's one of the ways that I like to look at the market. And again, bringing it back to the TA is the key here. When we're talking about max pain theory, there are times and places to use that. But I think people take that one out of context. Yes, 70% of options expire worthless. Yes, max pain is cool, but it's cool in very specific conditions. E.g., if we have a market that is range bound, we have assessed a channel and we figure that there's max pain at a resistance or a key support, again, bring it back to the technicals. So we're not going to always have that chart there. When we bring it in, we'll feel like it's relevant to the markets, and hopefully you guys enjoy that a little bit more. Let's now talk about Tesla, and we'll talk about Apple. And I tell you what, Tesla did the goods. People are worried about it now all of a sudden. Look, it's coming into earnings. It's moved up heavily. I mean, there's no doubt this thing in just a week. Let's actually have a look at these couple of week candles here. So in like about a month, we've moved up around 16.51%. We're now at a point of almost all-time highs, and we're coming into the earnings, of course, on the Wednesday session. So what do we expect? Well, we've talked about the fact that often there's a buy the rumor, sell the fact event on Tesla. Now, I'm not saying that Tesla's going to miss. I don't know. No one knows if they're going to miss or not. And we're not even sure if they're going to have a great market result and then still fall off. But in general, there seems to be a lot of hype and anticipation into this stock. And if it hits a technical resistance, some technical traders will be taking profit or scaling out. That's just the reality of the situation. Hence why it's finding some weakness here. It's hit a great technical. If it has an awesome result and breaks through, well, then we start to talk about, is $1,000 in the sky? Is that the ordained price for the next move for Tesla? We'll talk about it when that comes. But yes, earnings is here. That's the risk. That's why it's finding some consolidation here. And you fully expect it. People de-risking after what's been a phenomenal couple of months of trading here on the stock. Let's take a look at the calls and options in terms of the expiration for the 22nd of October. Straight away, you'll notice there's huge amounts of puts. In fact, the puts continue to rise here. Is that relevant for us right now? Actually, no. Because while it does mean that we have a huge amount of negativity on this stock, and I don't know why there's so much negativity with such strong price action, in general, this just creates a put wall or a put barrier. And if the market was to come back down to this level, I would expect there to be a technical level around this area and for us to see hopefully some buying there. The calls are not enough to really be relevant. So in this discussion, it's just basically a wash in terms of there's nothing useful for us to see in that area. And I just want to quickly explain that. Apple, on the other hand, strong breakout close. That's had another follow-on effect. We're going towards that 150 area, you would think. That's a key technical resistance and also a key call wall in terms of a lot of people are hoping for it to get past there. Yeah, Apple running into the earnings, you would think. It does have that buy the rumor, sell the fact kind of events on it. If you go back through history, do your studies, you'll notice that here's earnings, there's a big buy up into the earnings, and then even though it does great earnings, it tends to be lackluster. Make of it what you will. This is just something that happens. Go back and do your seasonal studies. Go back and have a look at earnings. Also understand that October is a good technical month. It's a good bullish month for Apple. In fact, the stats for Apple to go positive during October have generally been incredibly good. I think it's like 80%. And if that's the fact, and the stats themselves, because it's the fact, then you can bring that along with your technical analysis, with your technical breakouts and your structuring to give yourself more confidence to hold the trade. And as we know, confidence is key. How many of you guys out there, put it in the comments down below, how many of you have closed trades early or not had the confidence or lacked the confidence to hold it to your take profit levels? I'll put my hand up. I've done it before, guys. We all have, and hopefully we learn from those mistakes. So bring the stats together can give you that confidence. So 150, an important level. Let's have a look at the options. So this is the options taken from the previous video. This was obviously the previous day. And I want you to just quickly look at this 150 number. So this was sitting about 50,000. Let's now move over to the next day. Oh, what do you know? Come the 19th, in terms of closure, 150 has become a more popular strike. So in many ways, this is a few things. Number one, in our TA, we see it as 150 is a bit of a resistance. Very important. We also know that there's a huge amount of bullishness coming into the end of the week from most likely retail, a bit of Wall Street, a bit of everyone around that 150 level. So do we expect some selling to occur there? I guess you would from this. You would expect some TPing, or at least for it to come up to the 150 and hover there. Now, sometimes it will break through, and usually you'll see an explosion in all the options, and we'll pay attention to that. We'll talk about it when it happens, a very important change of dynamic. But in general, when you have a TP level set on your technical analysis or whatever, and you have a call wall there, it gives you a little bit more confidence that this zone is important, and this zone is most likely going to see some selling because it's in Wall Street's best interest, and in general, it is in the best interest of the market to let this large position expire worthless and then allow it to get through. Just in general, that's the way I apply it. And hopefully that's starting to make some sense to you. And if it doesn't, maybe stay away from options for the time being and get back into them as you learn more, or go check out fxevolution.com. And of course, you can enroll in our options trading masterclass. QQQ over here, let's talk about this level. This is a pretty important ascending channel here. Obviously, we've seen this support being found several times. We've got a great resistance in the future for us to focus on in terms of where we expect weakness to come back into the market. But in general, the Nasdaq is going to follow the S&P. So the S&P is hitting that downward trend line as we saw. And really, the Nasdaq's kind of going around this resistance. Another very strong day for it. If we look at the Nasdaq here, look at this. Straight through that resistance, does not care. It was always marginal, but it just goes bam, straight through it. Best case scenario here for a lot of people is going to be a pullback back into this red box. And I'll just zoom that in so you can see it here. If the S&P does end up weakening off that trend line retest, then this is kind of the level. 15,000 would be a zone that a lot of people are looking at. And it may not sound like as big a support as you want, but this will be a 20 and a 50 exponential moving average on the daily. It's going to be previous gap closes, quite a lot of them cleaned up. I mean, obviously this one will be the glaring one in the future, but I'm sure we'll get that eventually. And overall, I expect some buyers to come in here. 15.2 will be another level. But yeah, watch the S&P 500 and correlate it to the Nasdaq. It does look strong. The weekly looks pretty phenomenal. And at this point, there's a lot of FOMO in the air. I'm smelling a lot of people that have potentially not been quick and fast enough to get into the market are starting to feel, a little bit of FOMO and a little bit of, I've missed out. And look, that's potential. But in general, when everyone feels something, the market will put that spanner in. And I could see it come back down to these levels due to the S&P 500 analysis. Hopefully that helps people out and gives you a bit of an understanding of what I'm seeing in the markets. Bitcoin, phenomenal moves. Everyone's talking about this now, and that probably is a sign in itself. But look, I've taken the move of the initial ramp. So this is the initial ramp, and I've extrapolated that out to the current ramp. And you'll notice they're very similar. We're also hitting a point that's basically the highest point for Bitcoin ever. I mean, amazing. Great, Bitcoin. Very fantastic. I'm happy with that. And the way I look at this is, well, it's awesome. Firstly, the king is back. Great to see it. And I do expect Bitcoin to hopefully be able to crack this number at some point, go 70, 75. And I've talked about, potential 90 to 100,000 by the end of the year. November should be a relatively strong month in terms of overall the month. From Bitcoin, we always see usually pullbacks in this market after big ramps. So we'll see whether this is where it consolidates and then money starts to move into other coins. Surprisingly, things like Cardano continue to weaken here. Ethereum's holding its own at 3,800. And then we've got some things like Polkadot, KSM, and other coins in the alts as well that are starting to really find their, growth, and people are starting to buy those. So I think Bitcoin's kind of at this little bit of a resistance at this stage. If we go down to the time frames and we start to think, well, where can we get involved in this trend? I guess we have two key moving averages. The more aggressive buy is the 20 on the 4-hour, very aggressive buying, and it seems to have done well. And the more consolidated pullback seems to be the 50 exponential on the 4-hour. So notice both of these have found heavy buying pressure, and that's something I'll watch in the trends to come here for Bitcoin if I want to pick up more, or I'm looking at specific entries for scalping, day trading, etc. from a technical perspective. I also wanted to put things in perspective in terms of the markets, and that is that we expect October to be strong, we expect November to be relatively strong, and then December to be, of course, lackluster. And in most times, you'll see the next pullback kind of happen that January, February period, and that's just the normal markets. It's, of course, the generalized period between 1950 and 2020 in terms of data, and the past 10 years, you can see it here. So in the past 10 years, it's really been that December that actually has been lackluster and compared to the November. We'll continue to follow that story and bring you the stats as we get them updated, etc. Stock markets, pullbacks, another thing. People worry about, I'm not going to get another pullback and everything. You generally do. I mean, we've had 2 pullbacks this year, and in essence, you usually get about 2 to 3 pullbacks, and that's really it. I mean, average is 4.6, but you've got to remember that's skewed heavily to really weak times. The only difference between this crash, as in the pandemic crash, and normal, is that normal markets, they'll pull back heaps during the first year, and the second year usually has a lot of volatility in it. This is one of the first times that first time I've ever seen in my trading career, and even in stats, where we've had a massive epic collapse in the markets, followed by a huge return, and then relatively little pullbacks. And I think this is the Fed and, of course, just sentiment being so high. So maybe 2022 will bring us a few little more epic, let's call it, corrections. But in essence, I am still pretty bullish for multiple years here, and I've explained that a few times and reasons why. Thanks so much, guys. Hope you've enjoyed the video. If you have and you found value in it, please remember to subscribe, and of course, smash that like button. It does help us out. Thanks so much. See you in the next live session or, of course, video. Bye for now.